Well, ahead of this week's interest rate decision by the Bank of Canada, we're getting a fresh indicator about the strength of the Canadian economy. Canada's inflation rate edged up slightly in August, with a smaller than expected decrease in gas prices fueling the increase. Richard Forbes is the principal economist with the Conference Board of Canada and joins me now. Richard, good morning. So was this in line with expectations?
Yes, exactly. The reading that came out this morning was pretty well what most economists were expecting. Inflation, it's been, moderating over the past year. We saw the removal of the consumer carbon tax in April continue to push prices down by about zero point 0.6 percentage points since that time as well. And the other good news that continued through August is the impact of the retaliatory tariffs put on by Canada on a lot of U.S. goods hasn't gone through to prices too much. So overall, the reading today is ultimately good news for the Canadian economy.
And how do gas prices factor into inflationary pressure?
Well, gas prices are certainly a big part of the basket that Statistics Canada measures. They did tick up a bit in August, but a lot of that was due to more seasonal effects, a lot more demand for gas in August. So overall, they're still 12, 13% lower than a year ago. So still some pretty good news on the gas price front.
And what about food?
Well, food remains a little bit sticky, and a lot of that was due to the retaliatory measures. Things like orange juice, a lot of other imported food from the U.S. has seen their prices rise in recent months. But, these retaliatory tariffs, they were lifted on September 1st, so we should see some relief for things like orange juice going forward. So although it was a bit of a concern in summer, we should see some relief soon.
So what do the inflation numbers mean then for a potential Bank of Canada cut tomorrow?
Well, it certainly reinforces our thinking that we're going to see the Bank of Canada cut interest rates by a quarter point tomorrow. The inflation numbers today, inflation seems somewhat under control now, or more so than a year ago for sure. Taking that into account, the Canadian economy is also teetering on a recession. We had a really negative reading for growth in the second quarter of the year, and it looks like the third quarter is going to be at best flat. The Canadian economy had lost over 100,000 jobs over the past 2 months. So, considering that weakness in the economy and the fact that inflation is a little bit less of a concern now than maybe the bank was thinking a few months ago, we should see a quarter point cut tomorrow morning.
Richard, you may have buried the lead there with your comments around a possible recession. What do you expect to hear then from the Bank of Canada on that, on the state or the health of the overall economy, and how close we are to entering a recession?
Well, that's certainly something we've really been monitoring. We don't know what's going to happen with this U.S.-Canada trade and security agreement that we keep hearing about is in the works, but it could still be many months away. So I think the bank's going to be really monitoring the economic situation over the next few months and into 2026 as well. A lot of the impact of the trade war has been seen through uncertainty. So a lot of businesses haven't been hiring in recent months, as we've seen in the Statistics Canada data recently. So the economy is really just a little bit sluggish right now. We saw, weakness in the second quarter. The third quarter is looking pretty weak as well. If the economy slips into a deeper recession than the bank thinks, we could see further rate cuts. But for now, the economy is holding up well enough that we think there'll just be one quarter point cut, and then they'll hold rates steady into 2026.
Richard Forbes is the principal economist with the Conference Board of Canada. Richard, glad you could join us today. Thank you.